Ladies and gentlemen, NIO CEO recently dispelled rumors about acquiring Audi unprofitable Belgium factory, emphasizing a focus on strategic growth in China instead. The CEO of NIO has recently put an end to rumors regarding the company's alleged interest in acquiring Audi factory in Belgium. Speculation had been circulating that NIO executives were spotted visiting the factory to evaluate a potential purchase. Audi is reportedly selling the facility because it is unprofitable, and they wish to protect the jobs of the workers by finding a buyer. However, the NIO CEO firmly dismissed these claims. He stated that if Audi cannot sustain the factory due to financial struggles, it would not make sense for NIO to take over and try to keep it afloat. In his words, the idea of NIO buying the factory is simply out of the question, impossible. This rumor has been thoroughly debunked. The factory acquisition rumor broke when it was suggested that NIO might take over Audi plant in Brussels. The CEO of NIO addressed this directly, saying, "Why would we take over a factory that Audi can't afford? How could we possibly manage it? I don't even know where such information originated. We have no plans whatsoever to acquire the Audi factory." In light of shifting strategies and the imposition of tariffs, NIO has adjusted its European expansion plans. Pausing these efforts is a strategic move, allowing the company to conserve cash and avoid overextending in uncertain environments. Despite the challenges, NIO battery swap stations remain highly profitable, generating around €200,000 annually in energy trading and grid stabilization. These swap stations are immune to tariffs, making them a lucrative part of NIO business model. The global expansion focus for NIO seems to have shifted toward the Middle East, while expansion into the US market has become increasingly unlikely due to the new 100% tariffs. Selling cars in the US would not only be difficult due to these tariffs, but would also require significant infrastructure investments, particularly in building swap stations. For now, NIO's primary focus remains on its domestic market in China, where it has already captured 40% of the luxury EV segment. With the upcoming ONVO launch, NIO aims to solidify its presence in the mass market. Meanwhile, the Firefly model, which will debut soon, is expected to dominate the budget EV category. NIO is positioning itself to offer vehicles ranging from 100,000 RMB to 900,000 RMB, making it a dominant force in every market segment. If this strategy plays out successfully, it will benefit NIO shareholders tremendously, as NIO could become a behemoth in the EV industry. Although NIO has discussed expansion into markets like Brazil, import taxes and tariffs make such moves less feasible. Initially, plans were in place to expand into France and Italy, but those have been put on hold. Even the UK expansion seems to be postponed for the time being. The focus has now shifted firmly to China, which is the world's second-largest automobile market, trailing only the US, while the US is a crucial market for NIO in the long run. Focusing on the massive Chinese market makes strategic sense for the time being. There was speculation that purchasing the Audi factory might help NIO avoid European tariffs by building ONVO, Firefly, and other NIO models there. However, NIO CEO remarked that even with the tariffs, the company vehicles would still be competitive in Europe. So, setting up a factory there may not make financial sense, especially since such an endeavor would drive up costs. It seems NIO will keep production in China, at least for now. As for US expansion, the timeline remains uncertain. NIO CEO has said that the company has been planning to enter the US market for the past 6 years. When NIO went public, the goal was to expand into the US by 2020, but that never materialized. The 100% tariff makes it highly unlikely for NIO to sell its vehicles in the US in the near future. However, US customers and NIO fans can push for a change in this rule by petitioning their politicians. There is a demand for NIO vehicles in the US, particularly for the unique ecosystem NIO offers, including NIO houses and battery swap stations, which could provide a lot of convenience, especially in dense urban areas like New York. In China, some battery swap stations are even built underground, showing how innovative NIO is with its infrastructure. Such a model could be replicated in the US if NIO eventually expands there. For now, though, NIO European and US expansion plans are on hold. NIO is expected to observe how things go in the UAE, where it is set to launch soon. If the UAE expansion proves successful, NIO might consider further expansion in the Middle East, potentially targeting countries like Saudi Arabia. The rumor about NIO purchasing the factory in Belgium has no basis, but the company may consider establishing a factory in the US if it ever becomes serious about circumventing the 100% tariffs. However, that would require significant financial resources and a firm commitment to entering the US market. For now, NIO is concentrating its resources on solidifying its dominance in China. This measured approach is likely to benefit shareholders as the company continues to grow and strengthen its position in the EV market. NIO CEO is making responsible decisions by not overextending the company and focusing on key markets like China, where they can continue to dominate. While the US expansion remains uncertain and European efforts have slowed, NIO's strategy of focusing on its home market is expected to pay off for shareholders. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.